Okay guys, so pretty much now that you know, not everything, but you know pretty much what we're looking for when it comes to the sense of, trend lines, support resistance, the Fibonacci's, the channels, all that, there's one more thing, and this is going to be the most important thing of all, and I mean of all, so pay attention to this section, okay? You're going to go to indicators, and you're going to search up on balance volume, okay? On balance volume. Boom. On balance volume. Now, what is on balance volume showing? This is going to be exactly how we spot our divergences. And you guys know me. You know my YouTube channel. You know that I'm all about divergence. Okay? So what is divergence? Divergence is pretty much a sign of either market reversal or market continuation. I'm going to show you an example of every single type. That way you can study, pay attention, and look for these throughout the market, okay? So, right here, we see a sign of, this is actually called bearish divergence. When you see bearish divergence, you believe the market is going to come down, okay? As you can see, if you were to draw from this, let's just say these points right here to this point, right? You have a higher high being made here. But we're going to take a look at our on balance volume and see what we see. And I'm going to make this black so it's a little easier to see for you guys. Boom. But if you were to take this on balance volume and draw that same trend from the same spot, look at that. Look at that. It's doing the opposite, right? This is bearish divergence. This is a sign that this trend is getting weak. This uptrend is now getting weak. Look at that. Look what happened after we saw that bearish divergence. Oh my god, a 250 fucking pip drop. Just ridiculous. That's just ridiculous. So simple. This right here, take a picture of it right now. Screenshot this. This is bearish divergence. This is a sign that the trend is getting weak and it's going to go to the downside. Okay? When you're looking at bearish regular divergences, you draw them from the top. Okay? As you can see, from the top and from the top. What do I mean by the top? I mean the top of the chart, not down here, okay? This would be the bottom, and you're going to need to know about the bottom soon. This is the bottom. No, you draw from up here, the tops, okay? That's bearish, regular divergence, okay? Now, let's look for some bullish divergence, and oh my god, I already see some. Check me out right here. From here to here, what do we have? We have a lower low, and now we're looking for bullish divergence, regular bullish divergence. We're going to draw it from the bottoms, okay? Look at that. Lower low being made, but higher low being made here. This is a sign of market, reversal here, but to the upside now because we're looking at bullish divergence. Regular bullish divergence, that is. Okay? Lower low, but a higher low on the OBV. Now we draw it from the bottoms when we're looking for regular. Okay? And look at this. Market spiked up 123 pips. Guys, this is not rocket science. It's very, very simple. We add this now that we see a trend line, whatever it is, you got two confirmations. It's beautiful, okay? Now, let me show you guys something very, very powerful, but very, very important, okay? You guys need to pay close attention. Take your screenshots because this is very important, okay? When looking at a trend, okay, let's see if I can find something. Would this be some? No. Bear with me. Alright guys, I'm back. I found some beautiful, okay, this is going to be called bullish hidden divergence. Now that we're looking at an uptrend, instead of marking the tops, now we mark the bottoms on the uptrend, okay? So look at this. Market is making higher lows here on this uptrend, as you can see. Trend is going upwards from this point. Let's take a look at what we see on the OBV. Look at the OBV. OBV is making lower lows. So now we have opposites happening from the bottom on an uptrend. That is bullish hidden divergence. And what does that mean? That means market or trend continuation, right? So the market's going to continue moving in this trend. And what did it do? It sure the fuck did. Boom. I mean, I don't want to measure the whole thing, but I mean, holy shit. Hundreds and hundreds of pips up. Just beautiful. It's just beautiful, okay? Look at this. Now, let's go look for some bearish hidden divergences. And remember, now you're going to draw it from the tops on a downtrend instead. Okay, so let's go see if we can find some. I'll come back to you guys in a sec. Alright guys, so let's look at some hidden bearish divergence. Okay, we see the market is trending to the downside. Okay, from here to here, whatever, the market's trending down. But look at this. OBV is showing lower highs. From this point to this point, we have lower highs being made. But look at the OBV. Oh my goodness, we have a higher high. Market from the tops, guys, because this is a downtrend and we're looking for bearish hidden, not regular, but hidden. Market from the top. And something that I always do to remember this is, look, when you're looking at the tops, obviously, because it's bearish hidden, you can also see it kind of made the shape of a squeeze, right? So look, it made this shape right here. And then from here, it went up, okay? Oops. From here, it went up. It's the shape of a squeeze, and when things get squeezed, they come down like that, okay? That just looks fucking terribly wrong. I'm so fucking sorry, guys. But that's just how I look at it, okay? When you do it from the uptrends, though, like let's say it was right here, it looks more like an opening, okay? When things get open like this, they go up, okay? That's just how we're going to word it from now on. It's going to help you guys out, okay? I have to sneeze, so if I sneeze, I'm sorry. I don't know why I'm so allergic today. But bearish hidden divergence spotted here. Oh my God. And what do we have after that? Market continuation to the downside, 277 plus pips. Guys, it's not rocket science. It's very simple. Alright guys, so this is going to be the Fibonacci section of the course. This is very, 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 very fucking important. Take as many notes as you can. Pay attention to this. It's very simple stuff, but it's very, very important when trading, okay? I have to sneeze. I can feel it coming. So if I sneeze on you guys, I'm sorry. Okay? I don't have the fucking coronavirus. Look, I don't think I do. So, this is your Fibonacci right here. I told you put it in your toolbox earlier in the video, or earlier in this course. So, there it is right there. Fibonacci retracement, okay? How are you going to draw your Fibonacci? You're going to draw it from the main push, okay? The main push. Look at this push to the upside. From here to here, you have a main push. So you draw your Fibonacci from here. Oh my God, my mouse. From here to here. Okay, I'm bringing it over here so you can see it throughout the whole chart. But all I did was draw it from here to the top, okay? From this to the top of this wick, because this is where I see a main push created up. Now, look at the rejection on the 0.50 and the 0.618 zone. If I mark this zone up, you're going to see the rejections all across this. This is a huge sign of this reversal. So watch this. Boom! Played in this zone for a little bit and shot up for major 145 pips minimum. Shot up for, right? So, let's go find you some other ones. Let's see if this is one right here. You can see market structure going up, and then it breaks down with a solid push from here to here. As you can see, boom, market push from right there down. Do we have that rejection? Yes, we do have that rejection. Look at the it barely kissed it, but it still rejected the zone. If you would have entered right here, boom, look at the droppage there. Over 100, probably like 90 pips right there dropped. Huge rejection and drop. Okay, let's see if we have one right here. Just mark this up from this push. No, we don't have a rejection here, but we do have a 382 rejection, which is also a major number. So if you see it reject 382, it could also be a good sign. Okay, I'm just going to show you guys some more examples so you guys can really understand what I'm saying here, okay? So, see if I can find any more examples for you folks. Bear with me. This is where the markets kind of got ugly because of the stupid coronavirus, but it's okay. Let's see. This could be one right here. And look, they're not always pretty, but they work. You have a push to the upside from here to here, right? You have multiple rejections near this zone. And then guess what? Boom, from here to here, 120 pips profit right there off of that rejection. Can you trade the Fibonacci by itself? Absolutely. But if you use this Fibonacci with other different techniques such as your trend lines, but not only look at this, we have our trend line, we have our support, then we draw our Fibonacci, we see the rejections in that zone. I told you I was going to sneeze. Damn it. You see the rejections near that golden zone, and you're on some support, and you see the trend. Oh my God, you have 3 confirmations. This is a beautiful setup. Fibonacci is amazing, okay? Set your Fibonacci up like I did earlier in the setup part, and you're going to see some beautiful things here with this Fibonacci. Once again, I'm drawing it from this push because I see this push up. The push stopped there, waited for it to test that zone, boom, test that gold zone, gone. Very simple. Study, take notes, pay attention, watch the video again. Fibonacci is very important.